I'm Howie Lim. This is Money Hacks by the Business Times. The landscape of retail trading is evolving at warp speed, fueled by an influx of AI tools promising democratic access to the markets and perhaps performance nirvana. Yet, as algorithms execute decisions in milliseconds, the human elements of discipline, risk, and psychology haven't evaporated. They've just become more crucial and perhaps more fragile. What does AI truly remove? What does it demand? And how should investors navigate this new hyperspeed financial frontier? Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And joining us today is Phil Waters, Head of Asia Pacific and Emerging Markets for OANDA.
Hi, Howie. Nice to be on.
Always good to speak. So we're thinking about how every major wave in retail trading removes a specific barrier, let's say cost, speed, capital, knowledge. What barrier do you think AI is actually removing, though, and which ones will remain stubbornly human?
Everyone's hot topic at the moment. It has significant potential to transform the retail trading industry, frankly. I think all you need to do is look back over the last 20 to 30 years at other key moments in time. Things such as when retail trading moved from desktop trading to mobile, social trading, then third-party platforms that enabled automated trading. AI feels like it could touch on all of those areas. It can reduce the barriers to entry because it can significantly support with building on that gap that exists around knowledge and experience. It could also become much more than just a co-pilot. Retail trading is today very much self-directed. It's the individual on the other end of a mobile or a PC that's executing the trades for the most part. And AI already is supporting in the sense that it acts as a co-pilot, but that is fundamentally more today around building on that knowledge and experience to understand better how to trade well. Part of it is around analytics, but what it could become in the next 1, 2, 3+ years is where I think it's fascinating. For what we know of trading platforms today, it could mean that they become invisible or maybe even obsolete at some stage.
For really?
Yeah, it's a pivotal point in time. The thing that retail traders have to be very mindful of, though, is it definitely won't be a silver bullet. There is a natural part to the way humans behave where a lot of people don't like to forfeit control. So they may always want to retain at least some degree of control. Then you've got all of the human emotions that play a part. So it comes down to discipline and psychology around trading. And it's one of the areas that people are not conscious enough about before they start their trading journey. And ultimately one of the reasons why they fail. Regardless of what AI can offer and how it may transform trading as we know it today, forever there will be this need to be super disciplined, the importance of risk management and being very well educated about how to trade, and not being exclusively dependent on AI in the way you trade.
From a more simplistic view, one might think that AI is something to help with better performance. It's a shortcut, if you will. It can do that huge data crunching for you, etc. So you're saying that AI cannot or is held back when it comes to risk management and trader psychology?
It certainly can. The challenge I think that we have is there will always be psychological breakdowns. There is this concept of FOMO and impatience, especially in a period, for example, where market conditions might be flat. If a human intervenes, if they tweak or abandon a model that's been suggested by the AI, then it starts to break that statistical edge, that human element of just being impatient and the urge to meddle. But ultimately, where it offers significant value from day one is it's allowing people to understand these pitfalls and these risks in a way that is suitable for the user. So every broker has designed their own way to try and explain what it takes to be a successful trader. But every single person has their preferred way of consuming information and knowledge. And that's where I think AI is fascinating in that context. For me, I like to learn based on audio and ask AI to create a podcast based on an article than have to read it. It gives the end user the ability to consume content in the way that they'll understand it the best for them.
Do you think maybe then AI might end up widening the gap between the disciplined and undisciplined traders rather than leveling the field, democratizing everything?
Potentially, I think that's a risk. Disciplined traders will use AI to reinforce processes, and undisciplined traders will use it as a crutch, or they'll misuse the signals that it's producing. When it comes to tools and the outcomes, sophisticated tools will require a foundation of risk control and strategy frameworks. Let's not forget, where AI is today, it has its limitations. There's risks of hallucinations, context window limits. So when it comes to large data sets, unless that data is grounded, then it can effectively give you analysis or an output that is based on a sample of the data because the data is too large. It has this concept of losing memory before it provides its output. There are still a number of other limitations, even just outside of that, inherent biases. I think over time, though, those limitations will either go away or there'll be measures to mitigate the impact of those limitations. And that's where it will become even more effective. Of course, there is also where we are today with general AI is the early stage. There is a conceptual stage that lots of the AI firms are working towards around AGI. And that's where it could become even more fascinating and frankly quite scary. That's several years away at least. But yes, so we might not see necessarily a significant widening of the gap, but I do think that there is a chance that the more disciplined traders will be able to reap more of the rewards from AI.
What do you think about then how we should be thinking differently with regard to risk management? Because now AI obviously speeds everything up, and then, well, volatility is a constant. And then there's also crowd behavior to think about. We don't want to fall into the FOMO trap. How should we be thinking differently when it comes to investing, when it comes to risk management?
Yeah, that's also a great question. It's always easy to forget these key points in history. One of the most significant points in history when it comes to the way retail traders trade is social media. Because what it did is it significantly increased the pace at which a retail trader could access information and data. More often than not, in fact, you end up seeing things that are happening in the news on social media first. It's where the noise kicks off initially, and then it becomes mainstream news. AI has the potential to manage the sort of preemptive risk of markets. So in fast-moving markets, AI can be an accelerated way of managing that risk and defining how you're going to manage that risk before you execute the trade, much faster than a human would react. Because social media, if it's the supply of information, AI can eventually be what is ingesting that information in real time. That has happened in some ways with automated trading on some third-party platforms, but it's much less accessible. In most cases, you need to know how to program and code in order to set up these algorithms. And that's where AI can also reduce the barriers to entry. There is, you could end up with the speed of your execution and setup of trades that is much, much quicker. So there's a preemptive part to that. And there's also a part around reflex. AI will amplify signals. It will cause sudden air pockets, and that may lead to these violent mean reversions. Of course, the other thing to keep in mind is that if everyone were to adopt AI and start to look at it as a way of acting on the signals that it could produce based on ingesting all of this social noise, market data, the news, there is then a risk that you have a skewing of the results, because actually, if everybody's doing it, then you'd start to lose the edge. And so the ability to generate alpha, returns that are above a benchmark index, start to diminish. We're very far off that being a problem, but it is something I think that could become a problem at some stage in the future.
Still to come, with AI's breakneck speed, is the effort to learn how to use it even a sound investment? And in the realm of finance, is the solo path truly the smart play? After all, who's more reliable than oneself? More on navigating these questions with Phil Waters from OANDA in a moment.
Lens on Singapore is now bigger and better. The same deep dive exploration of socioeconomic and geopolitical issues which impact our lives here in Singapore and the region is now a video podcast. If watching a conversation is your thing, join Claressa Monteiro in monthly conversations about things that matter. Subscribe to the BT Lens On playlist in the podcast tab of the Business Times YouTube channel and start watching today. BT Lens On Singapore, now available in audio and video.
And now, back to Money Hacks from the Business Times.
Welcome back. Phil, in 2026, what should we be doing really? Maybe just give up on using AI and just invest in it?
AI has already changed the way people behave. It's become a habit. It's part of our daily lives in most cases. So whether it completely transforms the retail trading industry, by the way, I think also massively depends on all of those risks I mentioned and regulators getting comfortable. There are a lot of inherent risks that come with AI in the way it's used and offered to retail traders and buy brokers. Regulators need to get on side with this. They need to support it. It's fastly moving and evolving. If you were to talk about what AI offered on ChatGPT and some of those other LLM models a month ago versus where we are today, it's moving that quickly that it's a different answer significantly. If people aren't already in that space where they're becoming very familiar with AI, how to use it, its pitfalls, its risks, being super aware of its risks and its limitations, that's what I think everyone needs to be doing this year. And frankly, it's probably a little too late, but not a foregone conclusion. People need to be getting on top of understanding all of this now and being also very aware that it is fast moving, it's changing. And so there is a danger that if you learn it today, what you've learned could be stale within a few months. And so you have to keep learning and keep that understanding as it evolves.
What about from the market perspective, AI in the retail trading space?
We in the CFD trading world, all of the brokers, we tend to operate and work with a research firm called Investment Trends. And they run lots of research and analysis on industry trends, competitor analysis and so on. They, for the last few years, have been covering AI and the importance of this for retail traders, how they're using it. And if you just look at where it was in 2024 versus 2025, it's gone from being around about a quarter of people in 2024 either were using or intended to use soon AI in some capacity when trading, to now 3 in 4, 3/4, either are already or intend to soon. It just shows how quickly that's transforming the way people trade. Now, today, that is mostly coming in 2 forms. One is it's helping bridge this knowledge gap. So it's helping people understand better how to trade. Just even from that trend alone, it's reinforcing the idea that this will be another key milestone in this industry's history that significantly will reduce the barriers to entry because it will be seen as a way to bridge that knowledge gap and the experience gap, which has always existed. The other way it's being used commonly is for analysis. So it's helping people understand the way the markets are behaving and, in some cases provide trade signals, directional signals on the way to trade. So in that context, given that significant change year on year, it will be super interesting then to see how traders behave in the face of what we have 2025, which is, monetary policy. The Fed obviously currently remains quite dovish to extend that cut cycle. How do traders react to that as we progress through the year? The US dollar, dovish Fed would suggest a US downtrend this year. What does AI do in terms of people's success rate with getting that trade right with AI support? Equities, there's been a long, throughout 2025 and even prior to that, a very good run for US equities. Gold, there's lots happening in the metals market, which is a counter to the equities point where there is definite increase in funds flowing into the safe haven assets. And so there's tons at play, as there always is every year. Now that you add that layer of so many more people are using AI in different capacities, like adoption rates are so high, what does that look like then for retail traders in terms of their success rates? Time will tell. It's going to be fascinating, I think, this year.
If there's a checklist though, Phil, what should be on it? What is a non-negotiable must be on it? Learn AI, tick.
Oh yeah, so learn AI, tick. The things that I would have told you if you'd asked me a year ago that have not changed is define your risk profile. AI is not going to change that necessarily. So you need to be the one to define what your risk profile is. So know what your limits are before you're engaging, how much money you want to deposit, how much money you're willing to risk losing, what your profit targets are, and what your risk profile ultimately is. define your hard controls. So, for example, determine whether you want to use guaranteed stops as a way of completely mitigating your risk versus the use of traditional stops, which are then subject to slippage. I think today the best approach is to look at AI as a consultant, as a co-pilot, rather than a boss. That's for where AI is today. Look at it in that context for several reasons. Don't let the emergence of AI and what it offers replace the need to stay educated. Because today, AI has not removed the fact that trading for retail traders is primarily self-directed. They are still the ones in control. So AI can help you stay educated and build that education. It won't replace the need to be educated. So you have to make sure you keep that as a focus. Maintain that discipline. AI will help understand why that's important, but human nature has a way of intervening, and there's a risk that AI will give all the right guidance and tips on how to approach trading, but there is that human tendency to intervene and make tweaks, and that's where you start to, I think, risk going against all of that. Messing things up, yeah. And the other part, I guess, finally would be to stay adaptable, because markets will always be very dynamic. Volatility is always just around the corner, and it's completely, in most cases, unpredictable. And so that you have to be adaptable to the extent that what you've learned, what you know before you enter into trading, on your trading journey and enter into the markets, you may well need to adapt that very quickly. At some stage in the future, I think AI can help in terms of the speed at which you adapt. But for now, in a co-pilot capacity, it won't do that. And so that's why it's still on the individual to make sure that they remain adaptable.
Takeaway order Money Hacks 255 is ready. Looks like AI is a real barrier breaker. It democratizes knowledge and speed, but the stubbornly human barriers of impatience, FOMO, and meddling psychology remain the ultimate portfolio killers. We should view AI as a sophisticated consultant, very good at data crunching and education, but never as an autonomous boss. And as AI adoption soars, we should stay adaptable, because using AI too much risks skewing results, potentially diminishing alpha generation, according to Phil Waters from OANDA.
Thanks very much.
Thanks, Phil.
My pleasure, Howie.
This has been Money Hacks by the Business Times. I'm Howie Lim.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.